Hello everyone, welcome to a new video for render price prediction based on Elliott wave analysis. Starting on the daily chart here, we are looking at several scenarios for render, which most of them are bullish on the daily, but of course those bullish scenarios need sometimes of course lower prices. So starting here on the daily, we have 1, 2, 3, 4, 5 a finished impulse toward the upside, finishing a wave A or a wave 1. After this both case scenarios, you would like to see a correction wave, 3 waves toward the downside, where we saw a wave B or a wave 2. After this, you would like to see continuation toward the upside impulsively, as you can see here, for a wave 3 or for a wave C or for a wave 1. So we have 3 bullish scenarios here. And that because, of course, we took the high, but not a very higher, of course, to say that we are in a wave 3 toward the upside. So your wave 3 here might be a contracting diagonal as 1, 2, 3, 4, and a 5. Your wave 4 would like to be a zigzag, of course, or 3 waves toward the downside, reaching between those perfect fib level for wave 4 in a contracting diagonal. In case you are in a wave ABC, you have finished, of course, a zigzag toward the upside, you would like to see, of course, an impulse toward the downside probably, or in case here we are looking for 3 waves down, 3 waves up, meaning you still looking for lower prices. Now, again, for another scenario where we might have a double 1-2, where you possibly have 1-2 and then also another 1-2, you would like to reach the wave 2 in between those perfect fib levels or at 0.618, and of course at the same time for the perfect fib time required for a wave 2 taken of course from this wave 1. And that meaning in all bullish case scenarios here, we are looking of course for lower prices. In case you want to continue a diagonal toward the upside, 1, 2, 3, 4, and a 5, preferably to continue this zigzag wave toward the downside, or this corrective wave, because it is a wave 4 as well, toward the downside, and reaching of course lower prices between the $1.9 and the $3 for render. In case we are in double 1, 2, your wave 2 still require, of course, one more leg for a wave 2 to reach this scenario as well, and of course start to move toward the upside later on. And finally, of course, if you are in a bearish scenario where you have an A, B, and a C, of course, you are looking anyway for 3 waves down, 3 waves up probably, and still looking for lower prices as well. By all means, we are in a big bullish scenarios, but those bullish scenarios, all of them still needs, of course, lower prices to move toward the downside. And of course, if we take a look a little bit close here at the 4-hour chart, we can see that there is no really impulsive wave toward the upside. In case we want to take here a 1, 2, 3, 4, your wave 4 interfere with your zone 1, there is no continuation, of course. I mean, there is higher prices here, but of course, this is not an impulse because it is not allowed your wave 4 to interfere with your wave 1. By all means, this has transformed to 3 waves up and then 3 waves down probably here, or a zigzag down as A, B, and a C, another 3 waves down, and then of course a continuation for an impulse 1, 2, 3, 4, 5. By all means, you are in A, B, and a C, of course, as 3 waves toward the upside, meaning that we still might look, of course, for lower prices impulsively. And here we go, we have started already as 1, 2, 3, 4, 5, probably as expanding a diagonal here, which is a very rare case scenario, and actually it might be working very well here. And that because we are looking at 1, 2, 3, 4, 5. Each wave is bigger than the previous wave, and also we saw already 3 corrective waves which cannot be impulsive again, and we're moving down again impulsively. So yeah, I know here it sounds like a very rare scenario for a expanding diagonal, but it is working perfectly, I think so. Yeah, I think I'm gonna take this scenario. I know it's very rare, but it is here. It has a very high possibility for a wave towards the downside as impulsive. So if you would like to have some targets as well, I will of course gladly put it for you guys. Here we go. So our wave 1 and 2 has been given, so we can have already a target for a wave 3 here. And of course we want to reach of course the 1.618 for a wave 3 in an impulse. Here we go. And you can see that perfectly it is a confluence with the first fib level that we would like to hit, which is a 0.38 fib level. Let's see it in a bigger picture. Here we go. As you can see, the fib level 1.618, which is the most common fib level, is interfering with the 0.38 fib level. Very, very nice price action for render, very clear, and of course, yeah, then we're looking, of course, for lower prices in all case scenarios. So that was it for render. Thank you for watching. Thank you for your likes and comments. See you in the next one. Bye bye.